Good evening. The discussion on the general budget in the upper house has been slated in the list of business in the Rajya Sabha for a couple of days now, and it was expected that today the resolution would be passed. But once again, as we have seen in the past few months, political issues continue to dog the smooth functioning of the parliament. The opposition has made life difficult for the government in the past, and this time it's an ally that is determined to address an issue before things can resume in parliament. The government got a big jolt today as one of the most crucial members of the ruling coalition, the DMK, quit the Congress-led UPA and its government expressing dismay on India's stand over Sri Lanka at the UNHRC. DMK Chief Karunanidhi also said that the UPA government had not only refused to consider DMK's views on the US-sponsored resolution against Sri Lanka at the UNHRC, but had quietly watered down the resolution. He has ruled out extending outside legislative support to the UPA as well. Reacting to the news, Finance Minister P. Chidambaram said that the Congress-led government was stable despite the pullout. But discussing the future course of political event is not on our agenda today. We will be discussing an equally important and related issue, that of the larger picture of the economic state of the country. With the budget resolution unable to be passed by the Rajya Sabha, analysts believe that it could slow down the march towards economic revival and getting down to business. The markets have come down after the adjournment, even after the RBI cut the repo rate by 25 basis points today. Ladies and gentlemen, tonight on The Big Picture, we tackle twin issues, that of the impact the political and regional agendas are having on the economic revival plans, as well as the post-repo rate cut scenario. And joining me right now will be Renu, Kohli, former member of the IMF as well as the RBI. And joining us will be a couple of more guests as we go along. I will introduce them, but I want to come straight to Renu Kohli right now and ask her this. First of all, welcome back to The Big Picture, Renu. Now, India Inc., or industry as we call them, cheered the RBI, the repo rate cut by the RBI, but their good day was slightly marred by the markets going down, tanking immediately after the announcement of the adjournment in Parliament came. The union budget and its announcements made in the union budget could be only implemented in earnest once the resolution is passed by both houses of parliament. Now, the Lok Sabha has passed it, Rajya Sabha still hasn't passed it. More delay is going to harm a planned growth revival. Your thoughts on that?
It is true that there will be certain delay, amount of delay in passing of the budget resolution. But at the same time, these political seesaw that we are seeing will eventually pass over. Markets are far more resilient than this, and they will rebound back too. And I think that the political situation will stabilize as well. So, yes, compared to say 5 years ago, I would say that the political risk in India is very high at the moment, and it has become, because obviously it is related to the coalition nature and fragmented nature of our polity, but one has to go along with that.
Right, Renu. Also joining us right now is Mythili, Bhusnurmath, consulting editor with the Economic Times. Many thanks, Mythili, for coming on The Big Picture. Mythili, you heard what Renu just said. Of course, I want to ask you the same question, get your reaction on that. The Rajya Sabha failed to pass the budget, failed to discuss even the general budget and pass the resolution. Do you think it could affect in the short to medium term sentiment in industry as well? As we saw after the adjournment today, the markets tanked.
Well, I'm not so worried about industry, because domestic industry knows that these are the usual, ups and downs of Indian politics, which have become worse with coalition governments in place. What worries me more is what the impact of this would be. What is the kind of signal that it sends to foreign investors, particularly portfolio investors? Now, portfolio investors, we all know, are very fickle. It's easy come, easy go. And anything that is perceived as a threat to political stability, it does not matter whether it is actually a threat or not, as long as it's perceived as a threat, they could react. And they could react like a cat on a hot tin roof. And at a time when our current account deficit is so large and our financing of it is so fickle, based entirely almost on portfolio investment, that could be very worrisome. In case they turn tail and pull out, even if fresh investors don't come, it won't be so bad. But if those who are already existing in India, invested in India, if they take fright and turn tail, then that could be very, very worrisome for our current account deficit. So that is my worry. More on the how outside world perceives us than as how we are perceived internally.
Mythili, today is the 19th of March. Parliament breaks for about a month on the 22nd of March. How important is it really for our parliamentarians to get their act together and pass at least the budget resolution? Because after that, if they delay that, they'll go on a break for a month. Now, that cannot be good. This needs to be passed as soon as possible.
Well, I'm a little bit more optimistic on that because after all, you can always extend the session of parliament, you can get it passed. I'm not so worried really about that because this is really political grandstanding, and ultimately, as it's very evident, both the Congress as well as the DMK have left sufficient wiggle room because nobody wants really early elections. The DMK is trying to get its pound of flesh and they feel this is the time for them to press that opportunity home. So it's basically that. It's just a question of who blinks first. And I think given the situation, I think the Congress party might have to back down.
Very interesting views there, Mythili. I wish I was doing a show on that, especially, but maybe another day. I want to go to Jagannadham Thunuguntla, who's also joining us right now. Many thanks, Jagan. He is, of course, the equity head at SMC Capital. Jagan, your views? What does the market really feel today after the adjournment news kind of spread? Market sort of tanked. What is the sense you got today?
I think somehow market has completely forgotten about RBI monetary policy. Entire focus was shifted to the political developments, and that was just a coincidence. Both happened almost at the same time. I think strangely that nobody has even time to read the entire speech of Subbarao today. That's strange. But it was a severe knock on the market. That to the Cyprus-related equation that was going on, international confusion, and add to this, and it will be a problem. And moreover, one thing is clear, Athar, is that the curtain riser happened for the 2014 elections, just that DMK has raised it. Now I think all the chess play will start about who will back what and how will they position themselves. I think one thing is for sure, we are very much in the process of getting into the elections.
Right, as Jagan said, many people forgot about the RBI rate cut. I'll tell you who didn't forget about the RBI monetary policy meeting today. Rajya Sabha Television and the big picture did not forget. That's what we'll be discussing now on the program. I want to go back to Renu Kohli right now. Renu, even though there has been a repo cut 25 basis points along expected lines, of course, Subbarao seems to have kept everyone really happy. But analysts now feel, and I was reading the business papers today, there is a sense that lending rates of banks might not see a cut anytime soon. It is felt that the banks would cut the lending rate when the deposit rates, both short-term and long-term, start showing a decline. Thoughts?
Well, for the rest of this month, it seems unlikely because the monetary transmission will take place because the liquidity deficit is very high. That's seasonal, in part because the government is not spending and also because of advanced tax payments and the seasonal outgo that happens takes place on account of that. But beginning April, I do think that the government is going to start spending in a big way. It's got a lot of cash balances on the central bank's balance sheet, about 1 lakh crores if believed to be so. So I think that monetary policy transmission will take place thereafter. Banks need to start lending also because let us not forget that interest income supports their balance sheets. And with a cut in the interest rates, certainly the corporate balance sheets are likely to be, the stress on their balance sheet is likely to be alleviated to a certain extent. What worries me, however, is deposit growth. Banks are very much quicker in their monetary policy transmission when interest rates are going downwards in reducing deposit rates, but they aren't as fast as far as loan rates are concerned. So if you see the mismatch between deposit and credit growth, the gap is about 2 percentage points, and the credit as a ratio to deposits is already stretched at about 79%, and that's when we have growth which is below 5%. So going ahead, if GDP growth recovers as is expected to about 6 to 6.5% over this fiscal year of 2013-14, then that is a problem, and that is the impact upon interest rates. There is an imbalance between savings and investment incentives, and that's what worries me.
Right. A very pertinent point, Renu. You talked about deposit rates, and exactly the question I'm going to put to Mythili. But before that, we'll take a small break. We'll return in no time. Stay tuned. Don't go anywhere. Welcome back to the big picture. Before the break, Renu, Kohli, of course, mentioned deposit rates as well. I want to go to Mythili Bhusnurmath, consulting editor with ET. Mythili, this move is expected by the RBI, of course, to benefit borrowers, both corporate and retail. But what happens to those on the other side of the fence, depositors? Will the deposit rates, according to you, be cut? And how do you see things moving forward in the days to come?
Well, Athar, if you see, banks have recently been raising their deposit rates for the simple reason that deposit growth has really slackened. And one of the reasons why that has happened is because real interest rates on bank deposits have been negative for quite some time, which is why you see depositors, savers rather, turning increasingly to non-financial instruments like investments in gold. So if you're going to lower the interest rate further, the interest rate, real interest is going to become even more negative, in which case you will find deposit growth slowing even more. In which case, what do banks do? Ultimately, you can lend only essentially out of your deposits. So banks will have to try and keep their deposit rates where they are and lower their lending rate if they wish to pass on the lower benefit of lower interest rates to their borrowers, which essentially means that banks will have to squeeze their interest margins. Now, are banks A, willing to do this, B, in a position to do this? I seriously doubt it, which is why I am a little puzzled by the RBI's action. I think frankly it was only that the pressure on the governor was so much that he really felt compelled to cut the rates, because otherwise if you read his speech, the recent speech that he gave in the London School of Economics, he was very emphatic that he says any inflation rate over 6% not only justifies but also demands monetary tightening.
Right.
So having said that, just about a week ago, his cut in policy rates is a little surprising. The only rational explanation that I can think of is that perhaps the pressure on him was so immense that he felt that if he did not cut rates, markets would tank and the consequences would be so adverse. In hindsight, maybe it was a wise thing, because the political developments, had they come on top of any action of the RBI to hold firm, I think we would have seen much more bloodbath on the streets.
Right.
So maybe it was a wise thing that he did in hindsight.
It would have been a bloody day, of course, for the markets. Markets stank, of course, anyway, but because of political developments in Delhi. Jagannadham, Thunuguntla, you heard what Mythili said. First up, I want to ask you, do you think, in your opinion, do you agree with Mythili? Was the governor really compelled or pushed against the wall so much that he didn't have any choice but to cut the rate right now? Also, your outlook on deposit growth, Jagan?
To some extent, yes. I think one more thing, I feel that there may not be any more rate cuts for the rest of the year, for a simple fact that with all this uncertainty, political developments will lead to rupee weakening. Already rupee today is at 54 rupee 50 paisa around. So if it slips below 55, again we will have a lot of imported inflation, meaning thereby all the oil and all other items that we import will add to our inflation angle. So RBI will have much lesser room to cut the rates. Somehow I feel the rate cutting cycle may be more or less coming to an end. I think now whole focus will be shifting to the political developments and the impact on the rupee and the impact. And one more thing is, somehow the past history suggests that even though RBI cut the rate cuts, banks will pass on with a lag of 6 months, meaning thereby there may not be much of cushion for the growth as well, because banks may not be as aggressive in rate cuts, so passing on will not happen. So all in all, to that extent, today's RBI policy may be just a non-event.
Right. Mythili, I want to come back to you very quickly before I go to Renu. Now, Subbarao might have kept everyone happy, including the Finance Minister P. Chidambaram, who was sort of pressurizing. He wanted a rate cut and has been wanting a rate cut for a while now. But he might have kept everyone happy, including the people on the street. But one keeps coming back to one question, and your paper, of course. I was reading your paper today, and one of many points it poses very rightly is that what will this particular repo rate cut really achieve? Has the previous ones or the previous two ones really achieved anything? People can argue that there's been little improvement in credit demand. Investments have not really increased. Also, the counterpoint here, of course, is, and many people argue, that there is always a lag when it comes to monetary easing. What is your view on that?
Well, frankly, Athar, I think it will achieve very little, and that is only to be expected, because as I think many commentators have said before, and the governor himself has made this point, which he repeats in the policy statement today, is that the problems really for investment not picking up are much deeper, are structural. A change in interest rate, a reduction in interest rate can only help at the margin. And unless other host of other things, he mentions a fiscal deficit, he mentions the structural delays and those kind of issues, unless those are sorted out, you really are not going to see a change in the investment cycle. Unfortunately, political instability doesn't help at all. So I think the problems have only got compounded. Even if this present phase of political instability does pass, as I expect it will, it doesn't really help at all. So as Monte Kaluwale also mentioned, he says nowhere in the world does anybody expect a cut in the repo rate to really spur growth. It can only help very marginally, and that is the unfortunate part of it all.
Right. Renu, Kohli is still with us. Of course, you heard what Mythili said. Your thoughts on that political instability, even though you might think that it will pass, and you have said it will pass, even despite that, do you think that's not going to help at all? And also, I want your thoughts on the point we were discussing before this, that the governor was really compelled to do it. Like Mythili mentioned in a speech in England somewhere, he had mentioned that, this is not really the path to go on, but he goes ahead and cuts repo rate by 25 basis points. Was he compelled to do so because he didn't have any other option?
Two things. To answer the first part of your questions, between April 2012 last year and January 2013, the RBI reduced interest rates by 100 BPS. And we have only seen growth slowing further and investment collapsing even further. So there has been no revival on investment. So much for the relationship between one-to-one relationship between interest rates and investment. Obviously, there are other factors at play, and I would like to flag uncertainty. Political as well as economic, both are extremely high, and of course there are other issues which are more structural in nature and on which the RBI on its part can do very little. The second thing is political risk. Political uncertainty has increased, but as Mr. Chidambaram, the finance minister himself said on his road show to investors, foreign investors in Singapore some time ago, that in India the political risk is the single most highest risk. That remains, and I think going forward as we go into general elections over 2014 and until the outcome of that general election is known, political risk will remain. It may ebb, it may go up further still, but I do not see that quite ebbing away. The third part of your question is about the governor's compulsion. I interpreted his speech a little bit differently than Mythili did. First of all, on the current account deficit, he spoke about the relationship between the current account deficit and interest rates. And if I remember correctly, he said two things. One is that import demand in India does not respond as robustly to interest rate changes, and to the contrary, it is more robust in response to income changes. And therefore, an interest rate cut at this juncture is not likely to boost import aggregate demand to the extent that it accelerates imports in any significant way. The second thing he mentioned was the domestic foreign interest rate differential and how that determines foreign capital flows. It is true that interest-sensitive flows respond more to bond markets, and in India the bond market is relatively insulated. And the gap between the openness of the bond and the debt and the equity market is very, very wide. The equity market is very open. It has virtually no restrictions. And we all know that the world over, the stock markets love easier interest rates.
Right.
So what he was calling the Indian exceptionalism was actually it favors the stock market, and hence the interest is cut.
Right.
So I thought that the governor was actually veering round to the view of cutting interest rates.
Right. Point taken, Renu. Very quickly, Jagan, before we head into another break, your view on the argument that some people say that monetary easing, these things always take time, there's always a lag. But don't you think that in this case, the lag appears to be slightly too long for our benefit, for our comfort, for a developing economy like India? And only an eternal optimist can really say now that growth recovery can be quick anytime soon.
Absolutely, I think not just for the, let's say, home loan borrowers, and not that at that level. Even if you take the corporate borrower level, for the investment climate to get stimulated, I think it should be a lot more productive rate cuts, and it should be a lot more effective. I think to that extent, it may take a lot more energy to stimulate the investment climate, which may not be the case immediate soon. Just even though it may be slightly away from the subject, the food security bill which the cabinet has cleared in the evening again reflects the fact that the populistic side of the story, and then the government's urgency to clear the desk as soon as possible, maybe just preparing for any eventuality, I think probably reflects, I think market will take it in a slightly negative manner. It will not be surprising if market sees one more wave of selling thanks to the cabinet clearing the food security bill this evening.
The big picture heads into a small break right now. When we come back, we'll look towards the future, and I have some other questions for my three guests. Stay tuned, more coming up on the other side of this break. Welcome back to the big picture. We, of course, discussing the effect of political events in Delhi and how they affect the economy as a whole. I must remind my viewers that the upper house of parliament failed to actually pass the budget resolution today because of some political developments that took place, of course. We also discussing the RBI rate cut, 25 basis points, of course, the repo rate has been cut. I want to come to Mythili right now. Mythili, before the break, we heard what Renu had, Renu had a different take on what the Governor Subbarao had said in England. I was going through Renu's article in a leading daily today, and I'm going to quote two lines from it. I want Mythili's view on that. And I quote now: the wholesale retail inflation wedge and its influence on inflation expectations, coupled with the CAD risk, will determine the future path of interest rates into a neutral zone. Further lowering of interest rates can be excluded in the near term. How far would you go to agree with her?
Well, it's very difficult to say which way things will plan out, because it's very clear that when the governor cut policy rates, he does expect this to translate into increased demand somewhere, because after all, unless it's going to lead to more lending, there's no purpose in cutting the rates. So the worry is that if you really cut interest rates and the monetary transmission works, then you are going to see all the problems that Mr. Thunuguntla talked about, a higher CAD, and what you're going to do, and especially since his governor has also mentioned that the fiscal, unless the centre is serious about managing its fiscal deficit, there are going to be grave problems. But with the passage of the food security bill, I'm not sure the government will be able to contain its expenditure, and all these things will impact the interest rate.
Right. Jagan, your views?
Absolutely. I think, as I just mentioned before the break, that this food security bill with 1.3 lakh crore total subsidy burden, and then maybe 35,000 crores initial burden, I think that will set the tone. I think will not be surprising if S&P and Moody's come out tomorrow and day after start making again noises about just a noise about downward. I'm not talking about a risk of downward, but at least a noise of downward. I think that can't be ruled out. So all in all, it seems that the whole economy is at a precarious point. I'll be really wondering how far the new FII inflows can come at this point with the international confusion and the local confusion. So I think we are getting into quite a precarious situation.
Right. Renu, do you also expect noises about the sovereign ratings to come out soon again by Moody's and Fitch might come out with something tomorrow?
No, I don't think so, except for the political risk. I think that the fiscal slippage risk remains for the coming financial year, but more from the revenue side than the expenditure side. The food security bill and all that, the expenses that are associated with it will take a while to kick in. But the revenue assumptions are critically dependent upon market performance, that is disinvestment and spectrum sales, etc. And that's where the worry arises from. As far as the number of the fiscal deficit is concerned, I think that just as the government stuck to it, the 5.3, in fact, to 5.2% of GDP this year, I think next year's deficit target will be met. I think there is complete assurance from the government on that count. And my sense is that it will be met. The slippages, if they occur, will be from the revenue side. And, well, we might just see some more juggling of expenditure.
Right.
On that count.
Right. Jagannadham, Thunuguntla, very quickly, should we be expecting another baby cut of about 25 basis points in the May policy, which will no doubt be influenced by the trajectory of core inflation, of course, which in turn, of course, is expected by some analysts to remain slightly low? Would it be correct if, or at least a decently feasible assessment, if I was to say that there is unlikely to be any aggressive easing, but easing will continue at a gradual pace going ahead?
No, in May meeting, I'm not expecting any rate cut. I think probably RBI will wait and watch whatever the cuts they have done till now and how the whole situation will pan out and how the banks will react. I feel May it will be a wait and watch policy.
Right. Renu, very briefly before I go to Mythili for closing the show, do you think monetary easing has paused for a bit?
In the near term, yes. Very short term. I mean, like the next review is due in May. I'm not sure. Of course, it's very hard to take a view in that sense. We don't know how GDP will pan out, how industrial production will collapse, and most of all, we don't know what the external situation will be. If global growth recovers, there's a rebound in commodity prices that will feed back into inflation, and therefore, you can say no to more interest rate cuts. But on the other hand, if the scenario unfolds completely differently, you could have another rate cut. So it's uncertain as of the moment, but looking at it from this point, at today's point of view, the RBI seems to have been done for the time being.
Right. Mythili, very briefly now, to wrap this up for us, of course, have we seen enough rate cuts now? No more?
Well, the governor has made it very clear. He said the space for further monetary easing is very limited. And he also says that he expects inflation to continue at the present level. So both these signs would certainly indicate, statements would certainly indicate that for now the RBI is done, the ball is in the government's court.
Absolutely. I must thank all my guests before I end the show. Mythili, Bhusnurmath, Renu, Kohli, as well as Jagannadham, Thunuguntla. Many thanks for joining me on The Big Picture again. Of course, political developments in Delhi did jolt the markets today. And as everyone agrees on the panel, and I think even outside of our studios as well, that political uncertainty is not going to help the economy. The budget resolution needs to be passed. It will give investors the confidence that we are looking for to get back on the growth revival track that Finance Minister seems to have chalked out for us. That's all the time we have on The Big Picture tonight. Many thanks for joining us. Athar Khan saying goodbye, good night, and thank you for watching.